Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, October 9th, 2020. Another day, another rally. Markets seem to be fixated on the prospect of stimulus and more or less immune to any headlines that don't have the prospect of stimulus. For example, between yesterday and today, we heard various rumblings that Speaker Pelosi was talking to Treasury Secretary Mnuchin, and they were going to try to restart the stimulus. Um, and that was enough for a little bit of an overnight rally, call it 0.75%. And despite the fact that there were just headlines from Senate Majority Leader McConnell that don't expect any stimulus before Election Day, which pretty much means that right now that means that stimulus is at least 3 weeks away. And at best, in January or February. Regardless of that, the markets didn't seem to matter. I'm alluding to this now. Basically, I take the stimulus rumors that come out overnight as very analogous to the China trade rumors that we saw pretty much through most of the year. And I'm not going to say it's nefarious because that's quite a big aspersion. But what I will say is they seem awfully convenient as a way of kind of goosing the futures overnight. Because as we see, the market's been in a very tight range. We sort of ratchet up on whatever new stimulus talks, or, at the time it was China trade talks. And we just kind of continued, that's the excuse to rally the market. Can I put a nefarious spin on it? Yeah, sure. Right now, there's certainly, I would imagine that the Treasury Secretary would like to see the markets higher going into the election. But that's not necessarily the reason, because let's back it up. Stimulus would be good for the economy, probably good for the stock market. This point certainly needs it because it's banking upon it. But then again, we never really got phase two of the China trade deal, and markets didn't really care and didn't really sell off until it was Corona was the problem. So for a market dependent upon fiscal stimulus, I guess we're getting the right headlines. But again, I think the markets have really gotten ahead and said, oh, loving the idea of what I would call the blue wave in November. As I've said before, careful what you wish for, because you will be seeing higher taxes in some way, shape, or form if we do something on the stimulus front. And at this point, remember, if we are seeing this blue wave, I don't think that a lame duck session of senators who already are not all that eager to deal with stimulus, because if they were eager, it would have been done already. And so you have senators who are not all that eager to deal with it. If it's a lame duck session, they'll be less eager to deal with it. So we're looking at late January, which is Inauguration Day, at the earliest. What can happen in between is probably not something all that good. And, as we've learned, a lot of this stuff, the longer you wait, the harder it is to restart things. So careful there in terms of what we think we're going to achieve at this point. But, why let the facts get in the way of a good story? The trend, as we've seen, remains higher. Basically, my wife reminded me of this yesterday, and it's very true, because it's something I've said before. And I was talking to her about the markets in general and stuff, and she said, "You know what? The markets are pretty good at more or less ignoring all the known risks. Okay, so we won't get stimulus. If the market wants to go higher, it'll go higher. You can enunciate 5 or 6 different risks that could upset the apple cart, but for the most part, the stock market has already told you they don't care. The problem is it's the 7th. We don't know what that is. So at this point, we've managed to get through a president with COVID. We've managed to get through an election that appeared to be unfriendly to the stock market, that is being taken as friendly to the stock market. By the way, that's what happened in 2016. But anyway, it was the opposite, I should say, happened in 2016. The candidate that was supposed to be market unfriendly ended up winning and proved to be market friendly. So you can throw conventional wisdom out the window. If something upsets the apple cart, it'll be probably not one of the known unknowns, and probably one of the unknown unknowns, and I don't know what that is. Otherwise, it wouldn't be an unknown unknown. I do actually think that markets will eventually wake up to the idea that A, stimulus is not forthcoming immediately, and B, the taxes on companies and on high wealth individuals will probably be going up accordingly, neither of which is market friendly. But in the short term, again, why let the facts get in the way of a good story? We do start to head into earnings season next week. Remember that, old friend? And we'll see where that takes us. I think stocks benefited in the last two earnings seasons in April and July because analyst expectations were quite negative, and the better quality stocks were able to beat those weak expectations. Now it's harder to say that a lot of the stuff isn't priced in, and certainly we may see earnings estimates that reflect a better economy and better scenarios for the individual stocks. Let's see where that goes. It's one thing to rally off of earnings season when you're coming in off a low. It's a little harder to do so when you're coming in near your highs. Let's see where that takes us. But again, earnings season is very stock specific. And the real key will be what happens to the stocks that have inordinate weights in the indices, because that's what really can move an index. If it's stock number 450 beating or missing its earnings, it doesn't really make that much of a difference, unless you're a holder of that stock or its options. Anyway, have a good weekend, everybody. Bye-bye.